Hello everyone. NVIDIA beat earnings and estimates and it is up 14%. Is is that a good thing, a bad thing? Is that something we can explain? Why is it up 14% in a day? So let's see at its earnings bit and we can check that on the TradingView site. And you have to switch to daily and you're gonna have these little buttons on the bottom, sorry, English is hard, on the bottom here. And as you can see there's a green E and you click it and they beat earnings by 8.5% and revenue they beat by 0.6%. But is this good? Is it bad? Well, in my opinion, it's bad. That's why I do not understand why Nvidia is up 14%. Yes, it beat estimates, but if we take a look at their financials uh, and we go to quarterly, revenue is down. Like revenue is down, and there's a pretty grim picture for the PC computers market for the near future, let's say, especially if we are going into a recession. Anyway, let's say Nvidia beat estimates. Is it a good buy? Well, first of all, let's check the PE. 100. It's hard to justify a PE of 100, even for any corporation. It's really, really hard to justify this. 100 PE is just insane. It's insane. It means you take the market cap divided by 100. Uh, that's the net income that they make. And usually fair value is when PE is 15. That's where fair value sits at. Anyway, I like to use a combination of Yahoo Finance, but I also am a member of these guys, Everything Money. They're great YouTube. They have a great YouTube channel, and they also have a great software. I'm gonna zoom in a bit, so this is probably better. Now, uh, again, they have a really high PE. It's 89 here. Probably it's updated here. Profit margin, pretty good. Gross margin, very good. High return on invested capital. Enterprise value is very close to the market cap, meaning they have very little debt. Uh, yeah, net income, almost 6 billion. What I like about this Everything Money site is they have the 5-year PE and it's at 100, which is too much. um, yeah, and they have the 5-year profit margin. So in the last year, the profit margin is a bit down, not too great. Income statement, they have pretty stable growth, and all of a sudden, like, what is this? Is this sustainable? I don't know. Let's check quarterly, because you can see that quarter over quarter revenue is down from 7 billion to 6 billion. One one divided by 7 is what? 16%. Is 16% down year over year. I mean, quarter over quarter. That's not good. So it might stabilize in this 6 billion range, but it might also go down to 5, 3, it's not looking great. However, the analysts, they have analyst estimates here, and I am paying for this site, for access to this data, which if you like it, you can go to their YouTube channel. All props to them for this site, of course. But analysts are estimated that revenue is gonna double by 2028, which I'm not so sure about that, to be honest. But anything is possible. So maybe this one is believable, 37 billion. Even that is kind of high. We will see. Now, one cool thing they have on this site is they have some 8 pillars. And again, you can see PE is really high, and they also have market cap to free cash flow of astronomical numbers. We also want this to be below 15 when you buy. But you can scout, like, these are my pillars. You can scout, like, put it at 18 and find. NVIDIA is a really great company. It's just overpriced, right? It's just overpriced. So can we find a price to pay? Value and price have to meet somewhere. And when they meet, I'm a buyer. Right now, I'm not a buyer. And they have also this really great stock analyzer tool where you can assume like the revenue growth, the profit margin, the terminal PE, and your desired annual return. And what this does is it calculates basically the stock price relative to the present value of all future cash flows. So let's input some numbers really quick, and I'm gonna use the analyst estimates. Average is gonna be like, let's call it 10%. So I'm gonna put 12% on the high side. I'm gonna put 8 and 4. I'm being conservative because recession might be over us in the next few months, year. Anyway, let's move on. Profit margin 21, 24, 27. Free cash flow should be close to the profit margin over long periods of time, but is a bit lower, so we'll go lower as well. 19, 22, 25. PE. Average, fair value is at 15. So I'll put that here. Actually, let's put it on the low side, right? Put it on the low side because it's NVIDIA, right? Let's go 17, 19. So this should be the PE in 10 years, right? And we'll put the same thing for free cash flow. You can get 10% if you buy the S&P, 10% year over year since 1982. It's about 9 or 10%. It might be lower. I'm not sure. I have to verify. But let's put 10% on the low side, 12%, 14% on the high side. Because it's harder to get 12%. So we want to pay a lesser price, right? Click analyze. Stock is currently at 236. And yeah, it's just overpriced. NVIDIA is a great company, but it's just overpriced. So until it drops a little bit, which it can do, right? On the high side, call it $80. 52-week low was 108, right? So it's not impossible for NVIDIA to fall there. All right. I hope you got some value from this video. Like, share, comment, and subscribe if you got some valuable information. Thanks, and I'll see you next time. Bye.